Tesla stock has fallen over 50% from its peak and it's down again big on Wednesday. The market is down overall, but I think it's worth asking just how far Tesla can fall if the operations continue to get worse in 2025. We know that sales have fallen over 50% in certain countries so far in 2025. If that continues and the company now goes from making money to losing money, how much could this stock drop? It's not out of the question. The Tesla shares could fall 80, 90% or more if you just look at comparisons to existing automakers and other companies. Guess what? General Motors and Ford are growing faster than Tesla is today. So I'm going to dig into just how much downside the stock still has. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, FinChat. If you go to finchat.io/ASYM, you'll get 2 weeks of FinChat Pro for free. They have data on over 10,000 companies all around the world. All of the charts that you see here today and all the data I'm going to show is from FinChat. So check that out. It is a tool I use constantly in my investing research and in all the videos you see here on Asymmetric Investing. Let's start with a couple of those charts, and I want to start with Tesla's operations because the story around Tesla is still that this is a growth company. It's a phenomenal manufacturer. It has better margins than any company in the auto industry. None of that is really true. The truth of the matter is that Tesla's margins are now about at industry average, maybe a slightly higher, maybe a percentage point or two higher than industry average. But guess what? If the company's sales fall in 2025, we're going to see those margins start to come down. Those margins also include the credits that they get for selling EV credits to other automakers, the subsidies they get for making batteries in the US, that amounts to billions of dollars per year. They don't disclose the exact number. And of course, the $7,500 tax credit that you just get for buying a Tesla electric vehicle, that potentially could go away in 2025 if the Trump administration decides to cut that from the budget. That has been something that Trump himself has talked about. So those margins, while slightly ahead of some of their legacy automaker competitors right now, they could fall below legacy competitors. And guess what? Tesla is already growing more slowly than these companies. You can see that in this chart right here, that Tesla is the slowest growth of these three companies. That hasn't always been the case, but Tesla's deliveries have actually gone negative. Now, this growth number, this high-level growth number, is actually including the phenomenal growth that they've had in battery sales, again, driven by subsidies. So the auto business itself was down 8% in the last quarter. That, again, could continue in 2025. So which one of these automakers should you pay the highest multiple for? I don't think the answer to that, based on fundamentals, is Tesla. But check out these multiples that Tesla is trading for. I'm going to start with the price to sales multiple because this is the one that's a little bit crazy. This takes away things like operating margins and anything like that. So it's just giving you an idea of overall how much are you paying for the sales of each of these companies. And you can see that Tesla is trading for 8.2 times their sales. Again, those sales are probably going to decline in 2025, at least based on the early numbers. So you're paying 8.2 times sales, whereas General Motors trades for about 0.3 times sales, Ford trades for about 0.2 times sales. So Tesla stock could fall 90% and it would still be more than twice as valuable on a price to sales multiple perspective than both Ford and General Motors. Just think about how crazy that valuation is. Let's look at price to earnings multiple as well. The price to earnings multiple is 116 for Tesla. Again, if the stock dropped 90%, the price to earnings multiple would be 11.6. That would still be twice as high as Ford or General Motors. GM today trading for around 4 or 5 times their projected earnings for 2025, and actually their trailing earnings as well. So the valuation for Tesla and the operations for Tesla just don't match. Investors are trading crazy multiples, and if we see the business continue to deteriorate, as we've seen in the first couple of months in both Europe and China, where sales are down as much as 50%, I think these multiples could continue to come down. Remember, this is a manufacturing company with high fixed costs. They're operating manufacturing plants in the US, Europe, and China. Those are costly operations. So if sales start to drop, if gross margins start to drop, the company could get to losses and actually negative free cash flow extremely quickly. And some of the products investors are expecting are not going to hit the market anytime soon. FSD is nowhere near the point where it's going to be widely rolled out as a fully autonomous feature. That's coming from tons of competitors, including GM and Ford. They are adding their own autonomous services. And then you have the robots, Optimus. Tons of competition in the robotics world, and it isn't clear today that Tesla is going to be a leader in that space either. So investors are paying for a lot of upside that doesn't yet exist with Tesla, and shares could easily fall another 90% from here if operations continue to deteriorate. I'm not even going to cover the political dynamics and everything that's going on with Elon Musk here. I'm just going to look at the fundamentals and what we actually know about their operations, and nothing looks good for Tesla right now. So think about that downside. I do have a position on this. I'll put a link to the short position that I started via long dated puts in January. That position is up about 3x at this point, and I'm going to hang on to it at least for the foreseeable future. But let me know what you think about Tesla's future. And of course, check out FinChat, finchat.io/ASYM. Like I said, this is a tool that I use all the time, extremely helpful in my research, whether you're looking at the valuation of companies like Tesla or their specific operations. It can break down into the KPIs and even create custom KPIs, key performance indicators for all of these companies. So just phenomenal information from FinChat. Check that out and you'll get 15% off if you decide to become a pro user like I am. Let me know what you think in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.